Hello and welcome to traders and investors. I'm glad to present you the daily market radio prepared by analysts and experts from fx.co portal. Here we go. Today is December 7 and we're starting from euro-dollar pair with tin lower. Euro-dollar pair has not only settled below 1.0800, but has also managed to extend the ongoing corrective cycle. On the 4-hour chart, low RSI levels indicate the euro's oversold conditions within the intraday period. In the medium-term period, daily, the RSI downwardly crossed the 50 middle line, indicating a shift in trading interests due to the corrective move. On the 4-hour chart, the alligator's MAs are headed downwards, which corresponds to the bearish cycle. Contrary to the oversold signal, the euro continues to decline in value, indicating speculative interest driven by momentum. In case the euro falls further, the price could move towards 1.0700. However, it's important to consider that ignoring the oversold signal may eventually lead to the closure of short positions, which in turn could result in an intense price rebound. The complex indicator analysis points to the corrective cycle in the short-term, medium-term, and intraday periods. The next stage is the next major. It's GBPUSD, presented by Laurie Bailey. The British pound fell by 33 pips yesterday, demonstrating a serious intent to test the target level of 1.2524. Overcoming this level opens up the target of 1.2373, an area coinciding with the line of the price channel. And the actual target level. The main driving force in the coming days will be tomorrow's US Department of Labor report. If investors perceive signs of an impending crisis in the report, the pair will likely reach the target of 1.2373 soon. If investors don't see any cause for concern, then on a new wave of risk appetite, the pound will turn towards the bullish target of 1.2645. The Marlin oscillator, which is closely approaching the zero line, also indicates the precariousness of the situation. On the 4-hour chart, we generally have a downtrend. But it seems to be losing momentum as the Marlin oscillator moves gradually. Today, any price movements may turn out to be false signals, and we are awaiting a resolution of this situation with the release of the US employment data tomorrow evening. Gold, sweet gold, we've got a trading plan for this commodity asset presented by Dimitris Tapas. Early in the European session, gold is trading around 2029, within a symmetrical triangle pattern formed since December 5. A strong break of this pattern will likely occur in the coming hours, which could be seen as a signal to buy if the price consolidates above 2032. Gold has been consolidating after the reversal from the all-time high of 2144 to the low of 2009. The technical correction could mean a resumption of the bearish cycle, or we could expect a recovery in gold and could reach 2062. The unemployment claims will be released later today, and the non-farm payrolls will be released on Friday. If the latter data is positive for the dollar, we could expect a short drop in gold, followed by a technical rebound. On the other hand, if the data is negative for the dollar, we could expect a recovery in gold to 2062.58 Muri level. The metal could even reach the 61.8% Fibonacci level around 2090. On the downside, a confirmation below the psychological level of 2000 USD will change the overall uptrend and could increase the downward pressure towards 1955 and ultimately to 1937.38 Muri level. Our trading plan for the next few hours is to buy gold in case of a break above 2032 and consolidation above the 200 EMA. On the other hand, in case of a sharp breakout and consolidation below 2025, it will be seen as a signal to sell, with the target at 38 Muri or 48 Muri for first the step, located at 2000 USD per troy ounce. Here is Petar Kimovic with USDJPY currency pair forecast. Let's have a look. USDJPY has been trading downside today, and we found breakout of the tight triangle in the background, which is good sign for the further drop. Due to the strong downside breakout of the consolidation and the short-term downside trend, Petar sees potential for the further drop towards lower reference. Downside objective is set at the price of 144.60. RSI oscillator is showing downside range, with no evidence for the bigger bias. Key resistance is set at the price of 147.45. What about cross-currency pairs? For example, EURAUD, area of Makmar describes. On the 4-hour chart, EURAUD cross-currency pairs seems moving inside the downward sloping channel. But WMA30 shift 20 moves in the middle of body candle, which means that the overall EURAUD has the bearish bias but moving inside sideways condition. However, currently EURAUD is trying to break above the level 1.6521. And if this level is broken, then EURAUD will continue the upward correction to the level 1.6636. But this scenario will become invalid and cancel itself if on the way to those level targets suddenly EURAUD returned its weakness and broken below the level of 1.6330. That's all for today. See you online soon and good luck.